Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for January 6th, 2019. I hope you guys and gals are having a great weekend. Now before I get started, as always, I need to mention if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. All you have to do is click right over here where it says sign up today. I'm already activated, so obviously I don't need to, but that's where you do it. You just sign up and then try it out. Make sure you download the mobile app. And guys and gals, I gotta also say something. If you're looking for a good pricing deal with ForexAnalytix, okay, if you're looking for a good deal coming this next week, if you're looking for an annual or semi-annual subscription price, we have a special for you this week. I'm not going to tell you about it today. You're going to have to learn about it by listening to the FACE webinar that we do each and every day. It's free. So log in there or follow us on Twitter, ForexAnalytix, at ForexAnalytix on Twitter, and you can see what our pricing is. It's a special one for the new year. So make sure you get signed up and try us out. Okay, now I got that out of the way. Let's talk a little bit about this next week. Actually, you know what? I want to talk a little bit about last week, and then we're going to talk about next week. So last week, or this weekend, or today, I'm going to do something that I normally don't do, and I'm going to talk a little bit about candlestick patterns because for the most part, they really matter in the FX market because of the big candlesticks that we saw across the board. Now, before I actually talk about the candlestick patterns, I'm going to take you over to the S&P, okay? And the S&P, you know, going into this last week, we were looking for a reversal as we came up to the resistance zone. So I call it the resistance zone because it's the spike lows, okay, right here from February, or the lows of 2018. We're testing those previous lows right now. But I'm going to give you the but what you'll notice, and let me get rid of this arrow here. We closed with a really strong bullish candle on the weekly chart. Now, if the S&P continues this rally and we continue to go through this resistance, which you know, it looks quite possible that we could continue to rally and risk maybe from here to 2600, maybe even further than that in the S&P, maybe to test the underside of this this green broken trend line. That could take us all the way back to 2650. I'm not saying that that's going to happen this week. I'm just saying that that could happen over the next couple of weeks. When you have a bounce in risk, typically what that's going to mean in the FX market is that you're going to have a sell-off in the dollar. Okay, or you're going to have strengthening crosses like the euro, the pound, the Aussie, the Kiwi, that type of thing. So I wanted to show you some of these candlestick patterns that that developed this week, and most of you probably have seen them all, or at least kind of have an idea where I'm going to go with this. But the euro is the one that's a little bit of the wild card here, and that's a predominant component of the dollar index. So obviously we have to talk a little bit about the euro, and I'm going to tell you not regarding candlesticks but more of chart patterns. The euro dollar is developing this it's a bullish wedge. We have higher lows, okay, consistent highs, and we all know if we get a break above 115, that should be really bullish. As a matter of fact, I'm actually looking before 115. We just need to break above 114. You'll see it right here, 114 and a quarter, which is the 618 retracement of the 115 to 113 drop. So 114 and a quarter comes in right here. We break above 114 and a quarter. That should allow us to challenge 115 and possibly break out from there. Now, the reason why that I think that the euro could possibly break higher is not necessarily because of the euro, but look at the rest of the dollar pairs. So let's go over to the candlestick patterns of the cable or the pound. Now, what you'll notice here is a big hammer, false breakdown, and a big hammer. And you can see that big white candle coming through. Okay, well, it's blue on our chart, but you know we call them black and white candles. That goes way back before charts had colors on them. So black candle is a bullish candle, or a black candle is a bearish candle, a white candle is a bullish candle. We use different colors, but white, when I refer to white, that means bullish. Anyway, what you see is this big white candle here, but more importantly is the weekly hammer. Okay, long wick. Okay, that false breakdown, that should create some buying pressure coming in. Look at the Aussie candlestick pattern. Same deal, right? Shakeout, weekly candle, long wick, hammer, false breakdown below the support zone here. That's bullish. Kiwi, weekly candle, hammer, false breakdown, it's bullish. We closed at the highs. It's bullish. All right. Dollar Canadian, big, nasty, black candle. That's a Morrow, I can never say it. I always say it right in my head, but it never comes out correctly. A Morrow closing black candle. That means we closed on the lows, slight little wick up there. That is a bearish. It could almost be looked at as an evening star, but it's a bearish candle. We closed at the lows, big black candle. Big black candles, or big red candles in this case, usually followed by other black or red candles, bearish candles. So big reversal there. The US dollar, Japanese yen. Whoops. Let's go over to the candle patterns. Sorry, the candlestick patterns. You know, we had a pretty big pin bar, which, if you talk about, you know, S&P possibly going higher, that means that the dollar yen would go higher, euro yen, Canadian yen, Aussie yen, those types of things. And if you look at all those candlestick patterns, they'll pretty much give you the same conclusion as well. Now, if you look at the dollar, and let's take a look at the candles here. This looks, in reference, it looks a lot more like the euro, where we have like a spinning top. That's a daily, but here's the weekly. It's like a spinning top. You know, it's not very convincing yet, but if you look at not the euro, but you look at the cable and the Aussie and the Kiwi and the Canadian, you're really starting to see dollar bearishness come through. And as I just mentioned, if the S&P shows some bullishness, that could also, you know, translate into dollar bearishness. Now, one of the things that happened at the end of last week, at the very end, past non-farm payroll, after a really good jobs report, very strong jobs report, is Fed Chairman Powell and former Fed chairs Janet Yellen and Ben Bernanke. They both, or the three of them, were on a panel, and you know, the conclusion of that panel discussion was, look, if the markets look vulnerable from here, equity markets, the capital markets, they start to look vulnerable, the Fed can adjust policy rather quickly. And by adjusting policy means that they could get a little looser, and quite possibly cut rates. And basically, they filled up their toolbox with tools again, from a monetary policy standpoint, and they could act if things get a little out of control. So that's kind of a warning to the market, especially if you're bearish, that, you know, if things continue to drop and the equity markets continue to drop aggressively, or we see increased volatility, that the Fed might you know, be a little bit more dovish, and that hurt the dollar. And that's why the dollar really closed on its lows of the week, and that's why equity markets really rallied. It wasn't so much the non-farm payrolls, it was more of what the Fed governors delivered, Fed governor or Fed chair and the previous Fed chairs, basically their message that came across on Friday. So that was really important. Now, going into next week, let's talk about next week really quick. We are going to see ISM services data. Now, the ISM manufacturing data last week was extremely poor, and that reading, that big of a drop in the ISM manufacturing data, it usually goes hand in hand with recessionary type of an economy. So it's going to be interesting to watch the ISM services data being released on Monday. We do have the Bank of Canada rate decision coming in on Wednesday. Now, the dollar Canadian is I showed you on ForexAnalytix, and I'll show you here. We closed, you know, literally on our lows of the week, and that was that very bearish, bunch of bearish candles coming in. The market is expecting the Bank of Canada to raise rates, and this is puts the U.S. dollar Canadian in a very tricky situation, because if the Bank of Canada continues to raise rates and the Fed is at the end of its rate hike cycle, we could have a lot lower exchange rate in the U.S. dollar Canadian. We could trade closer to 130, which I think is channel support, versus where we're at 133.50, 134, and with crude oil starting to bounce, that seems like a very logical target if you're short the dollar Canadian over the course of the next few months, especially if the Fed looks like they are going to they feel that Fed policy is at neutral, and the Bank of Canada needs to play a little catch up and start raising rates. And we're going to find out more on Wednesday. Now, there are a lot of FOMC members speaking on Wednesday and on Thursdays, so including the Fed Chairman Powell. So that's going to be rather important. And rounding out at the end of the week, out of the UK, we have GDP and we have US CPI and inflation data at the end of the week. So it's going to be a pretty important week of data. Like I said, the candlesticks in this week really matter, and I think they need to be. You need to take notice. And I think that any dollar strength that we see early on in the week, you might want to use that as an opportunity to sell into any strength, because the dollar is starting to look weak, especially against so many crosses. So guys and gals, if you like this video and you think it's going to be helpful for you next week, make sure you click the thumbs up button and make sure you subscribe to our channel so you don't miss hearing about the price special that we have for ForexAnalytix subscribers, especially for those of you that want to be part of our community and chat like with not only myself, but most of our other team is in that chat room all day long. And it is a private chat room. You can click on it right here where you can go to the chat room, and I have another link right here. That's why it won't let me put it two links at the same time. This is what the chat room looks like. And then once you get in here, you can see all of us chatting throughout the course of the day. There's usually 80 to 120 of us throughout the course of the day that are out there chatting. So if you want to be part of this community, make sure that you take advantage of that by becoming a subscriber. So guys and gals, have a great weekend. My name is Blake Morrow. I'll see you next Sunday, and also if you want to catch us live throughout the course of the week, those webinars are free, the face webinars. So we'll see you there. Have a great day.